So now no one's going to be talking about Americans making shoes in America. No one's talking about them sitting and making sneakers anymore because those are going to be made in Vietnam. Those are going to continue being made in China because 10% all these companies can handle. Everything's up about 7%, 6%, purely because the market rallied and everyone's portfolio is up about 2% as well. I think bare minimum maybe 2% because the S&P 500 is up about 3%. The Nasdaq's up about 3.7 to 4%. So today the market blinked. The market blinked the last time on April 2nd of Liberation Day, all the way till April 7th, April 9th. You saw the entire crash that happened. Around that time, we were buying. What you're seeing today is that there's a reset in global trade. That reset is bringing it back to what we were before Liberation Day. The Chinese decided to drop down their tariffs from 125% to 10% on America. The Americans decided to drop down their tariffs from 145% all the way down to 30%. The market, to some extent, was expecting this, and that's why we've been rallying. That's one of the things that we've been saying in our previous videos. We're going to link that somewhere up here. But we've been saying it since a while that the bullish sentiment has come in. Try getting the signal out from that sentiment because everyone had turned bearish. Now you're looking at everyone turning bullish, and that's happening closer to the end of the good news coming in. So today's good news is the rally that you're seeing of 3% is purely because you're seeing these tariffs being rolled back. It's something that we've been saying. Trump tariffs are not what you believe they are. They're actually bullish for the market. If you weren't buying today or a long time back, like maybe 3 weeks back, if you were not buying then, today when you're going out to buy, you're about 5%, 4%. I remember, Sean, it was like about 4% is what we were talking about. Less than 4% from all time highs. This is not a reset. This is a system where you're having an entire full blown strategy reset. This is not just a reset of small trading parameters. America and China together would have accounted, they're the two largest economies. When they decide they're going to tariff each other in triple digits, that's global mayhem. I think we saw shipping containers that were entering the port of Los Angeles drop by 60% in bookings. That's going to cause a halt. If there is a drop in shipping containers coming into the ports, port jobs are going to be lost. Trucking jobs are going to be lost. Logistic jobs are going to be lost. Prices are going to get more expensive. You think the Trump administration and the White House didn't think about that? This was all of their game. They're basically saying triple digit tariffs, bring it down to low double digits. 10% is better than nothing. Before April 2nd, nothing. Today, 10%. Right now, 30% because the fentanyl tariff still stays in. And you know what? Here's my bet. I believe in the next 3 months or less, the Chinese will work towards reducing their fentanyl production, dropping down all of these fentanyl things that they're doing in the back end because they want that 20% also to be dropped to a 10. So they can tell their people that, you know what, we're tariffing them 10% and they're putting a tariff of 10% on us. It's a win-win for both of them.
Yeah.
And that's something that's pretty much happening. Now, for all of you that's wondering that's been living under a rock, here's what happened since April 2nd to today. America put in tariffs on China at 145. China put in tariffs on America at 125 in reciprocation. Markets tanked. We were at a bear market. The S&P was down 19%. The Nasdaq down more than 22%. That's a bear market. By whatever definitions you want, it's a bear market. We pretty much recovered most of it in the past 3 weeks while the tariffs stayed. None of them were brought out. The only one that changed is ex China, everybody got a 90-day pause. Today, China gets a drop back down to 30%. And China drops theirs 125 to 10. So the only tariff that remains is the fentanyl tariff. And what you're looking at today is the global trade reset. We're back to where we were. Stock prices will go back to where we are, like we said last time. When prices go back to all-time highs, they don't stay there. They skyrocket from there. So you're seeing stocks today, 6%, 7%, 8%. Nike's up 6%. So now no one's going to be talking about Americans making shoes in America. No one's talking about them sitting and making sneakers anymore. Because those are going to be made in Vietnam. Those are going to continue being made in China. Because 10%, all these companies can handle.
But do you think this is temporary, or do you think
What,
they
what,
will,
what I
after
would
90
suggest,
days?
I think this is necessarily not temporary. I think this is going to get better and better. If this was temporary, my bet would have been that Donald Trump would have put it at something around the 60s, 70s to hurt them a little more. and then slowly bring it down lower and lower. The fact that he's brought it at 30 means he's realized that he can't go on this path any longer. A lot of people were expecting these tariffs to stay till the year end, even 50% tariffs to stay till the year.
So, from what percentage will it go from, say, 8% to 125 and then 10%? The
So he dropped
Chinese.
the Chinese tariffs that were earlier there. So he also gave a brief. In his first administration, he did put the tariffs. Now, once Trump lost in the second time when he stood for re-election, when Biden won in, they were able to bring the Chinese were able to basically very smartly evade all of these tariffs. Because of
The
which,
minimums and all that stuff.
yeah, they were able to do all of that, play around with these numbers, so they were not paying a tariff. He came in and said, "You guys didn't follow what I said before. Now you're going to pay for what's happening." So because you're going to pay for what's happening, he put in fentanyl tariffs. He put in trade deficit tariffs. He put in so in all
Yes.
essence, America and China they have a large trade deficit because America buys 5 times more than what the Chinese buy from America. But the reason that happens is because America is a service-led economy. China is a production-led economy. What China produces, America buys, and what America produces, the Chinese are not allowing them to go in and buy because your Metas, your Microsofts, your Apples, your Googles, your Netflix is not allowed in China. So these companies don't are not able to give their services. So you have that big of a huge trade imbalance that's there. Who's going to fix that? Donald Trump came in and said, "I'm going to fix it." But here's how he's fixing it. He went into the boardroom either with a carrot or a stick. He went in with a goddamn gun. He pointed it at them, knocked them in the face. This is the tariff rate. You're paying it. I don't care. Chinese factories, I remember, I think Nikhil and Sean both were telling me this. Chinese factories were pretty much coming to a halt. All that we saw everywhere. Jobs were being lost. I mean, everyone knows the Birkin video that came up on TikTok, right? That the Chinese were ready to sell. Now, what's going to happen to those bags? That's something that I keep wondering about because what's going to happen?
I
I'm
think
not sure.
Hawkins will still sell.
Yeah, I mean, I'm
Hawkins
talking
will
about
still sell.
The Chinese Birkins, not the real ones. The real ones would sell for sure.
But I think the real ones are Chinese. Is what they're trying to say.
That's true, but I think you would still need the badging, right? You would still need the badging.
Yeah,
I
just
mean,
No, so I
whitewashing
think
it.
they used to source, they still source the material from China because I think they're still one of the world's largest leather producers. But, just coming
yeah.
back to the whole, based on, what we just saw. So how do you think this will affect next quarter's GDP? Because we know Q1 was negative, right? So
Well,
what do you think is going to happen? Did we just avoid a recession?
So here's what I believe. Analysts and investors will stop caring about next quarter's number. The reason why they stop caring about it is because they're going to look. So the market always looks 12 to 18 months ahead. It doesn't look one quarter ahead. When the market looks 12 to 18 months ahead, a week back or even a month back, everything seemed gloomy, right? Because of these tariffs might stay for 12 months. What if they stay for 18 months? Global trade would come to an end. The markets are a discounting machine. It takes all of the news and then concises it together. The reason the markets are up today and massively up today is because what the market's saying is all of that negative GDP data, all of that negative news, it doesn't really matter anymore because now people will start buying again. So no one's going to start worrying about, oh, Q2 GDP data might be bad. We might be entering a recession. But you know what people are going to start expecting? Q3 to be a banger. Even Q2 towards the end to be very high because we're only in halfway through May, right? So we still have 45 days of the quarter pending. So people are still going to be looking at this quarter that's coming up. They're going to start looking at Q3 numbers to be bumped up because now there's going to be pent up demand again. For all the guys that didn't shop for this 1 month, when are they going to shop? Now. So you might get a real
That,
big bump.
Yeah, we've seen
During
that
COVID,
rubber
yeah.
band and rebound effect during COVID, yeah.
Yeah,
Where
that's
just
true.
after demand destruction, demand just bounces back stronger.
Yeah. And that's something that we've been continuously thinking about also because we're not able to see that from that angle to try figuring out. During COVID, the low was when the lockdowns came in. None of us knew whether we were going to live also. The low in this market came in on the day that Trump came out and said, here's the tariffs. It's not going to change. And the next day when he started coming out and a few days later when the bond market rallied, bond market took him completely by storm. He caved in and he came in and said, here's what's happening, guys. Big news incoming, big announcement, big announcement. 90 days.
Yeah, and everyone thought this was the UK trade deal, but no, this was actually the announcement which he was sort of indicating about.
Exactly. And this
Everyone thought this was UK trade deal. Everyone when
Yeah.
he said big news out, we thought, okay, what's the big deal?
Yeah, and he's smart because he was able to play down the 145% to 80, then bring it down and said up to Scott Bassett. Now, Scott Bassett would have gotten a great deal and brought it down again down to 30. Now, they might come out and say, hey, you know what, we're going to be putting tariffs back if these guys don't listen and all that. Here's the thing, these guys are two very large economies. If they really need to make money, they need trade between the two of them, right? Vietnam, India, Malaysia, Singapore, we're never going to be able to buy as much as the Americans buy. It's the same situation as what's happening with China and America. No, the Chinese are never going to be able to buy as many goods as the Americans buy. And the Americans are never going to be able to produce things at that price as well.
But do you think they will do like a reverse and be like, oh, they violated the trade deals. There'll be more uncertainty, like not the good kind, like
I would
more
honestly
like
never say never when it comes to Donald Trump and the administration. But one thing I'll give them, when they they pivot very well. When they say we're going to come in and literally screw all of the markets, as I don't care about the stock market, I don't care about this, I don't care about that. He's going to come out pretty much and be like, you know what, this is what's happening. We had a great day. Remember, for Donald Trump, what's important is for him to take credit of the win. That's important for him. And I realize this. This is the signal part of the sentiment and signal that we have here. Is that when we realized that he was going to be making bullish tweets and the market was reversing, that's when we realized he loved that green day when we had the largest stock market move. And that's when I realized this man is going to want that again and again. It's like a lion tasting blood. He wants it again and again. And today, I will not be shocked if he comes out and tweets about how beautiful the stock market is and how amazing it is and how he saved all of us from the tariffs. He
But I
saved
think
us
the
from the
only yeah
tariffs. Remember that, guys,
yeah
because he's going to
he
come out
did.
and say that.
He's going to say that. I think the only question is why now? Like, I mean, what do you think? Sort of, what do you think was the incentive for the shift? Was it politics, optics, or just purely economic pressure?
I think truly, to a certain extent, he has a lot on his plate as well with the Russia
Hmm.
Ukraine deal happening. He's trying to do something with the India Pakistan issue that's happening. He has an issue where inflation could pick up if these kind of numbers come in. He does not have a Fed that's on his side and does what he wants, right? So he has a lot of wars to fight. And he realized that this might just be the easiest war to fight because he might just bring it down, ask the Chinese to bring it down, get it somewhere. And this might be the most monumental decision, right? Because if he's able to do this, he's able to solve a lot of the other issues. Now, globally, a lot of the countries are going to be like, maybe we can get a deal done. If China and America can get a deal done, we could get a good deal done too, right? That's bullish for America. That's bullish for the US dollar. That's bullish for stocks. That's bullish for global trade, right? It's bullish for why the Fed. Let me just say this. We have to give a lot of credit to Jerome Powell right now. What he's done as the Fed chairman by not cutting is pretty much buying insurance for the American economy. Maybe the interest rates don't need to be that high. But you know what? If we had these tariffs go on for another 2 months, we would have been in a very big recession. We would have been in a very big trade reset. And at that moment, Jerome Powell cutting rates would be required.
for 3%.
It's $4 for
425 to 450,
4.25%.
I
Yeah,
think.
425 to 450 in that range, right? So he can, how much he can cut, right? He can go 400 basis points down all the way in terms of a massive crisis. There's no point in him being at 2 and then dropping it to 0. There's less effect, right?
He
So
has
there's a
ammunition to cut now.
exactly, right? So that's something that's happening now. I do believe that it would be political to a certain extent because he also wants his one big beautiful bill, his tax bill to get cleared. So he's going to have to get some money out from somewhere. But in the grand scheme of things, this is exceedingly bullish. What this tells me is the administration and the White House don't want to see lower stock prices. Plain and simple. They do not want to see lower stock prices. Lower stock prices, lower household income, because everyone that comes out and says only the rich are getting affected, 40% of America, 40% of American money is invested in the US stock market. These are normal living middle class, lower middle class people that are living there. It's not just the rich that have their money in the stock. They might get hurt. You know what? To some extent, I actually believe the rich get hurt the least because they have so much money. They have other sources. So the rich don't feel it as much. What hurts normal people who are, I mean, I would say normal people in terms of those that are not rich. Few percentage are rich. A large percentage are not that rich. But a large percentage of people, when they see taxi rates increase, train rates increase, food prices increase, normal Coca-Cola prices increase, these kind of things affect them. You think a guy
At the
with
same
a
time,
few million
prices
dollars,
increase and then the 401ks take a hit.
exactly. So they're going to now cut down on spending, cut down on everything that they can. So I think there's the economic pressure is so large that he had to cave in. Now, who caved in, whether it was the Chinese, the Americans, nobody really cares,
You
right?
remember the Republicans saying we don't care about 401ks?
Yeah. So, he said a lot about, oh, short term pain, the market might go through a recession. Everything's shifting now. All of that's going to shift. He's going to pretty much come out and be like, I saved all of you guys. Trump tariffs? What are you talking about? What tariffs? Just a 10% tariff. This is the game they played. You either understand the game they played and profit from it, or you keep waiting to figure out when is the good news going to come and then I'll buy. But today, if you're buying, you're 5% away from an all time high. If you're buying a month back, you were 20% away from an all time. That is a heaven and earth of difference.
Do you think
Stocks are up
this?
35 to 40%. I think Nikhil was telling me, Broadcom, how much is it up? 50% since the
Yeah, I
lows?
mean from April, yeah. I mean, if you just go back to from April, Broadcom's up and Broadcom, SMC, Nvidia, all of them got hit because of the uncertainty, around those chip restrictions. But it looks like all of that might actually be a part of this negotiation, and these are just really strong companies.
True.
You don't really have companies of revenues of 96 billion or 100 billion growing at 35% year on year. It's you
True.
just don't have those type of companies in the world.
Yeah, true. And let's be honest, right? The pressure points that the economy is facing, a lot of it was prejudged. We were not facing. There was no data coming out which said it looks like we're in a recession already. Nothing. The jobs market was at what a million, 250K. That's your number. So what's the recession? Unemployment stayed steady at 4.2. You do not see recessions without people losing jobs. Plain and simple. You do not see recession without people losing jobs. The market's rallying today because people have their job, their 401ks are heading up, and people are buying. For everyone selling there has to be a buyer, right? Retail's buying. Institutions and hedge funds were selling. Who's making money today? The retail guys. They're making money because that's what happens. Maybe the markets are pricing in too much, too soon. But that's the way the market is. It is a discounting machine. It is discounting the fact that Donald Trump pivoted, the White House pivoted, the Chinese pivoted. Everyone's pivoting. What are you waiting for? New eyes? I mean, that's water under the bridge, guys.
But what do you think about this market reaction? Is it like a relief rally, or you think
I still
it's
do.
just pretty much optimism?
I still do believe a lot of people are sitting on cash after the fall that they saw. Good point.
There is room for the market to just head up higher.
For sure. I do believe we will see all-time highs this year and a lot more higher than all-time highs. Don't hold me to this. My personal belief with my portfolio, I don't see a reason why we shouldn't see another 10 or 15% year-to-date return
You
on
think
the
what is
Nasdaq and the S&P 500. I truly do believe that we could go 10% higher than our all-time high. I don't think it's not possible.
you think about IB stocks might do really, really well in this climate?
Possibly because of the amount of risk on sentiment that's currently going to be there, right? I mean, let me put it in a smaller way. Russia-Ukraine ceasefire might happen soon. India-Pakistan's war scenario seems to have ended. The dollar seems to have steadied itself. In production is pretty much going to boom because let's be honest, guys. You might hate him, you might like him. He did bring in a lot of deals when it came to these companies coming and signing and saying half a billion, half a trillion, 400 billion, 300 billion, 700 billion, right? That's real money, guys. That's a lot of money. When that comes in, you're going to get jobs, you're going to get things that are going to happen. All of those things are going to be pretty strong. So it's going to happen. Now, here's the fascinating part. Think of it this way. Trade deals can be changed. Once these companies decide we're going to spend half a trillion on a project, they're not going to change their mind every 3 months. Once they start digging in and start building, they build. And he's going to give them tax reliefs. He's giving them regulatory clearances. It's going to happen. I'm not a pro Trump or an anti Biden any of that. I'm here to make money. So my views are purely capitalistic when it comes to me. And that's the same with you two guys. I'm 100% certain about it.
Yeah, that's pretty much it. And I think what's interesting is last week there was a lot of noise about obviously the Fed stands, etc., and obviously Trump had a lot to say about it. You know, with today's announcement, right? How does this affect the Fed's decisions going on from here? 'Cause now, Powell didn't blink, right? Trump did. So what's going to happen now?
I would pretty much come in and say that the winner in all of this is the Fed. The Fed got the insurance policy of cutting rates when times get bad. And the Fed did a very, very smart thing by holding steady, saying they did use the word transitory. And to some extent, they got it right this time. They didn't get it right in 2022, but they got it right this time. But you know why they got it right this time? Because if cooler heads prevail during April's first week, what you realize is all of this could be shifted with a tweet. Inflation can't be changed with a tweet. Trade policy can be shifted with a tweet. None of this else can be shifted with a tweet. So all he did is met with the Chinese guys in Switzerland over the weekend. They stayed at a beautiful place from what I could see, enjoyed themselves, decided you choose a number below 40 and I'll choose a number below 20. And let's go at it. And let's see what happens. And the market's rallied. Now, obviously, I'm just saying it that way. They obviously had a lot of discussions, but they brought down tariffs. I mean, logically, if you think of it this way. Do you expect when tariffs are 145 and 125% and they get brought down to 30 and 10, right? Those are the numbers 30 and 10. Do you really think they intended to keep it at 145?
I mean, they themselves came out and said we don't intend to keep rates so high, and we had like a brief spike in the markets for a day or two, I guess.
That 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 to a large extent was purely because of the reason that at some stage it's a joke because trade comes to a halt at 100% and over tariffs. No one's buying anything, right? If things are going to be $1,000 and suddenly become $2,000, who's buying? Trade's going to stop.
I think somebody said it. I'm not sure. Was it somebody from the Wall Street Journal or somebody from the administration itself? They basically said the tariffs at these levels are basically like they act like a trade embargo.
Yes, and that's what they were. This was just the way for them to meet each other and get the deal done. That's pretty much what it was. This is grand posturing at its best. Nothing else. I don't see a reason why we should not be hitting all-time highs. We might see a bounce lower or markets heading lower. 3 to 5%. I mean that's fair game. That's not too much. It's not it's not magical. 3 to 5%. Like Buffett says, if you can't deal with a 15% drawdown, you're in the wrong business. If you can't deal with a 3% drawdown, maybe you change your time horizon. Don't go in there trying to make, short-term trading, move your prices up, try making, this overnight returns, try trading out of the money call options that expire in 24 hours or 48 hours. It's too much risk, guys. Take it easy. Play the long game. If you can get 25% returns and you compound it over 10 years, you can make 10 times your money. In 20 years, you make 100 times your money. In 30 years, you make 1,000 times your money. That's compounding. That's what Buffett's done. I'm not giving numbers out of thin air. It's power of compound. It sounds unrealistic once you cross the 100 and 1,000 times, right? But you got to stay steady. Again, benefit of the doubt goes into the situation to find 25% compounded annual growers takes time. But even if you get 20 and instead of 1,000 times, you're able to make 200 times your money. It's not bad. It's a lot of money. So don't lose more than what you can afford to. But at the same time, make sure that you're in it for the long term. You want to trade, you want to get some of that, maybe take $100, go to the casino, you get drinks free.
Let me just ask about CPI data numbers that are coming out tomorrow.
Yeah.
You think tomorrow would be a little bit like worse data coming out?
So I genuinely do believe that inflation was never something to worry about. So how does inflation happen for all the viewers and for everyone, right? It's simple. More people wanting the same product, but the supply of the product reduces. So the price increases. It's plain and simple. If we are going through a recession, if the consumer was pulling back on expenses, if the consumer was reducing the amount he spends on his pizzas, on his going out, on his restaurants, on his theaters. He has more money with himself as savings. What that means is there's demand for all these discretionary items reduces. That's what causes a GDP contraction. When that happens, you can't increase prices. When do you increase prices? You increase prices when more people want the same product, but there's a limited quantity. So inflation was a nothing burger. No, I don't even know why people were so worried about inflation in 2025. It was on a downward trajectory. The Fed wasn't worried about it. The Fed was worried about it. Here's the other kick side, right? If the tariffs do stay, and they were going to stay, like we didn't have today, let's say today we were not having this relief of 90 days. If the tariffs were going to stay for 90 days or more than that, you would see inflation pick. Now, the reason for inflation picking up at that time was not that there are more people wanting more products. It's the supply of the product that drops massively. So your toilet paper, your discretionary items, even your necessities, there would be so much less of demand, but there would be a sudden drop in supply because these guys would not be having inventory. All these companies would not have inventory because no one's carrying 6 months inventory. People are carrying just in time inventory, right? That's the game of global trade. That came to a halt. Luckily, that came to a halt for 30 days and not 300 days because then inflation would be surely a huge problem. And then, wouldn't it be stupid? Think of it logically, right? All of you guys should think about it. If the Fed was cutting rates and inflation started spiking, don't you think the Fed has to now hike rates to fight the inflation? So keeping the interest rate heavy at 4.5% allows the Fed to keep inflation in check, keep the job markets in check. And now, if everything comes back to the way it is, you're going to start seeing 25 basis point cuts from the Fed. The Fed does not like doing 50 basis point cuts. That's not their game, right? If the Fed is going to be doing 100 basis point cuts, 75 basis point cuts, that means something's breaking somewhere, right? So remember this. The stock market is a leading indicator. The stock market is the best leading indicator you have. The market tells you what it believes. Now, how do I explain that? From January 20th, the market topped. Somewhere around February, we made an intermittent top. We went up there and we started falling. Right? There were no tariffs in February. There were no tariffs in March. Tariffs came in April on Liberation Day, April 2nd, right? But the market had already topped out. So the market's a leading indicator. The market bottomed a week later, somewhere around 7th, 8th, 9th of April, even though the news got worse. So what does that mean? The market started leading higher and higher and higher because it's a leading indicator, expecting news to get better. That's how the markets work. So you need to understand the markets are a leading indicator. You must realize prices determine when you buy, when you sell. What you buy is a separate story altogether. But the stock market in itself is a leading
That's
indicator.
true. Speaking of what you buy, I think everyone's probably curious to also know what do you buy in a scenario like this, right? So, what sectors look attractive? What are some stocks to watch? I don't know. So, what are your thoughts on that?
I still do believe that it is not necessary that just because the US China trade deal is in the works and the tariff rates are lower, you should just go out and buy either Chinese stocks or American stocks that are wholly and solely catering to Chinese products in terms of Nike, Nvidia, the K-Web, or the FXI, which are the ETFs that track the Chinese investments, like the Alibabas of the world. They might have a momentary larger rally than everything else. I do believe your best bet still is something like the Max 7. Your best bet still is something. I do believe the world is entering or has entered and is entering and continues to enter a digital advertising bonanza. We spend a lot more of our time on social media. We spend a lot more of our time on Instagram, Snapchat, Reddit. These are companies that you should study because these companies, the more amount of time people spend on these kind of companies, the larger the amount of money they're going to make. These companies are just going to advertise the living daylights out of it. So there's a lot of money to be made in these companies that are addictive. That's what I always say. Buy companies that you believe are addictive, even for you. Like for me, I know, right? If I need to get a book, I need to get something, Amazon's the place for me to go. If I want something to be sold for me, which is more of a humane problem. Like I need to figure out a particular application, a particular process. Maybe someone on Reddit has faced that same problem. If I want, like I'm able to see today, right? The amount of time I spend on Google versus the amount of time I spend on ChatGPT. I get a lot more data, a lot more answers quicker on ChatGPT. Maybe invest in Microsoft, right? I don't care if you can take away a finger of mine, but I'm not selling or giving up my iPhone forever.
Will this have a ripple effect on like Indian markets, European markets?
This won't have an effect because at the end of the day, the mother market is the American stock market. Now, India might be facing its own issues to a certain extent, but I truly do believe that eventually, if global trade does come back to what it is and developed markets do move higher, like there's no reason for developing markets to not do well and emerging markets to not do well. That is something that I do surely believe. And one of the most fascinating things, which I'm not sure if a lot of viewers know, but the German index, the DAX, as of yesterday, and I think even today, hit a new all-time high. So, in order for a recession to happen, okay, here's the cheat code to recessions. Usually, it requires world markets to come down together. You can't have some going up, some coming down, because if some are going up, that means something's going right, right? We're too globalized in this world now. So, European markets were rallying while American markets were falling. You don't see that in recessions. You don't have a country specific recession, especially not the world's largest country, in terms of GDP at least. So that's something that's not necessarily going to be. I never, for one, believed that we were going to be entering a recession which would be detrimental to like a 2008 scenario or the 2000 tech bubble. I still believe that the AI industry is in a nascent stage. You would need to see far too many AI companies come out and do an IPO to start seeing a frothy nature come back in. Something like what we saw in 2021. You had a large digital fintech revolution, right? The SPAC revolution that happened. You could raise money even if you didn't make money, you didn't make a dollar, you could raise money. That's something that people should always stay away from.
I think the Chinese markets have been issuing IPOs last couple of weeks. Two of them have been like
Yes.
bubble tea
But yesterday had been
companies,
bubble tea, yeah, bubble
bubble tea
tea, green
companies.
tea companies, right? They're not some AI type companies. I mean, like, let's be honest. You can make a few people billionaires that own the company, but bubble tea is not going to be a $500 billion business, right? It's replaceable because somebody else can make it, right? So
Okay, I just want to like I know we've had very good news right now that about the tariffs being released on both sides of the parties. But being a little negative right now, could this backfire? Like, what if in the 90 days someone says, let's cancel the trade deal? Or,
oh, I
is it,
know who the someone is, though. It has to be Donald Trump, right?
or is it showing like, maybe they're losing their grip on power a little bit, like they're caving in too early? Or is it not the deal that he kind of wanted and he just came down to back to the start essentially?
I think from whatever I'm able to see with Donald Trump and whatever he's been saying as of now, I don't believe he's a guy that keeps going back and forth. He goes in so hard that then he brings it down to a number that he's
Yeah.
okay, right? So I don't think he's really a guy that would be like, hey guys, tomorrow. A lot of people do perceive him to be that way, which is why they have all stayed in cash and not invested. A lot of them have started perceiving him as saying, oh, you know what, he's putting tariffs today, he's going to promote tariffs tomorrow, day after he's going to be putting tariffs back again. The day after that, he's not going to be putting tariffs. So that's something that is, I mean, it's something that I can't really fathom because I'm not able to figure out whether he's going to be that way. But I truly do believe that he's not going to backpedal these tariffs. It's too hard for him. He will lose the narrative. And
At
if
least
he
for the
loses
90
the,
days,
I
if not
believe
for
it.
longer.
He might stop the 90 days, but I truly believe that he's not going to go more than the 90 days. I think he's going to get a trade deal done. I mean, here's the thing, right? If he gets 30% of a tariff down to 20, he's still going to take it as a win. And the Chinese are still going to take it as a win. In the grander scheme of things, I don't think 30 is going back to 145 for sure. That's my bet. Now, never say never when it comes to the administration, but 30 is not going back to 95 for sure. Even 145, 200. And I think the Chinese have lost so much that they're not ready to even reciprocate. They might say, right? I mean, I think in our last video also we spoke about they've been there for 5,000 years, they're going to be there for another 5,000 years, right? That's what Tony was saying. I
Yeah.
remember.
they've been posting about it that we can endure a lot longer.
Yeah, 30 days.
And do you remember that they've been saying, oh, what deals? No one's been talking about any deals happening.
Oh yeah, and now you have a trade deal suddenly in 2 days. I mean, that's just the way it is. I mean, one of the reasons why we wanted to make this video, I mean, we'll cut it short because we don't want to take too much of your time, but we wanted to make this video purely to explain to you that what we've been saying, even in the last week, when we put out a video earlier as well, that Trump tariffs are not what you think they are. They are bullish because he is going to get those numbers up. And that's pretty much what's happened, right? We have pretty much blatantly been calling everyone out and saying that, hey, markets are going to go to all-time highs. Are you ready for it? Most people were like, bearish, no, cash, maybe not. It's a bad time. What if he increases the tariff rates? What if globalization drops? What happens if we're in a situation where we're able to lose? At the end of the day, he needs to win his midterm elections as well. If he wants to pass everything that he wants to pass, he needs the House and Senate to go with.
You know what else is going to happen? Banks are going to come out and reprice the S&P for, I don't know, maybe the millionth time this year.
They're going to again get it wrong because now they're going to go overextended higher things. Because now everyone that was super bearish is now going to start getting bullish. Everyone that was bullish is going to get super bullish. So that's exactly the reason why you're going to be seeing the S&P 500 hit all-time highs and break higher. When the bears become bulls and the bulls get a little more stronger, prices head higher and higher, right? And that's something we've seen this time and again, all the way from 2000, 2008, 2020, 2025 now, even 2022 in the bear market. A lot of people forget, but that was brutal. That was really brutal. When some of the biggest companies are down 70%, a lot of people forget 2022 was a bear market. I would say it was a worse bear market than even 2020, of course. Yes, granted, 2020 was tough because you were not worried. I mean, you were worried whether you would live or no. But shortly, all said and done, 2022 prices were down 70%. We didn't see that in 2020 for about 9 months. No chance. That was a swift recovery as well post COVID.
Yeah, very fast.
Yeah, and this one's been too in 2025. If you logically think about it, in maybe this week or next week, we might even be closer to all time highs. Who knows? I'm just saying, we're up 3.7%. I got a message saying Dow futures up 800 points. What makes it 1400, 1500 today? Right? All they have to say is substantial progress is being done on trade talks. That's it. Markets go higher. Anyways, guys, do you guys have any more parting thoughts?
No, none. I
thanks.
think we've covered everything.
Yeah, we covered a lot. I think we should truly make another video about why we do believe that we're not going to be entering a recession, because we'll be talking about that. And maybe even give counterpoints as to why we believe if things don't work out the way they are, we could enter a recession.
We could
That being said, yeah, we could. So that would be a lot of fun, especially one of the stocks that we've been buying recently. We'll speak about that on another video. Maybe we can bring in people to speak about that as well. Anyways, guys, make sure to like, subscribe, and comment. Anyways, thank you guys. Take care. See ya.
See you guys.